Hello and welcome to another update video about Bitcoin. Not a lot of price movement, but therefore I'd also like to take a look at the Fear and Greed Index in this video and talk about what it might have for implications for the crypto market, especially for Bitcoin going forward, as well as another chart that I find really interesting about the number of active addresses around Bitcoin and how it influences the current, let's say, bear market demand profile, which is at the moment, we still even though there is a good chance, and we definitely have a case, that we are on the way out of this sort of bear market structure, out of the low, and that we have already seen the low for Bitcoin at 17,600, we still haven't really seen that demand change. And I think this is currently what is holding Bitcoin down. There's speculation going on around several altcoins that are producing their relevant impulses, like Quant, Ethereum, Polygon Matic, Ethereum Classic, but for Bitcoin we haven't really seen that yet. And I think when Bitcoin is really starting off with that, that will move a lot of the other altcoins as well. At the moment though, there's mainly movement around the altcoins, not so much around Bitcoin yet. Could be happening, could be coming, but we take a look at these two charts as well that I just mentioned. So just to get a little bit more of the macro view on things. But overall, yeah, we still haven't really seen here a change. I want to start on the daily. Had a few discussions with some viewers in the comments yesterday around the Elliott Wave account. What I have on the chart, that is my primary expectation, is an absolutely valid account, where I see the bear market low here from March 2020. That was sort of the beginning, at least, not the bear market low, but that was the beginning of this wave one. An impulsive wave one that ended in April 21. Now, of course, there are ones and twos before, and of course, I'm not ignoring the previous waves. I showed in various videos the overall wave count for Bitcoin. I can do that again at some point, but this was sort of, this is still where another wave one is starting, and we're now in this wave two. This is Bitcoin, in my opinion, Bitcoin's third 1-2 setup on the chart. You get these 1-2 setups usually when an asset is very young. Like we had a look at the Apple chart before in the 1980s, it did exactly the same thing. New assets require 1-2 setups to build the foundation for future growth. Without 1-2 setups, you can, it's extremely difficult for an asset to grow. So with these 1-2 setups are completely normal, and that's just one comment. And then from the low, obviously we moved up in a wave one. We're now in the wave two, or maybe that wave two is already complete. It's not been invalidated. That was another point of discussion. Why would it? Because a wave two can retrace 99.9% of the wave one length. Yeah, it can come down all the way to the beginning of the wave one. It can't go through. Yes, going down to the beginning is unrealistic. However, we have not even reached the 78.6% FIB level at 16.9K. So it's an absolutely valid count. This here was a wave A. This was a wave B, an overshooting wave B. You get these sometimes. And we're now in this wave C, or maybe it's already complete. Yeah, but this ABC structure is completing the wave two. Yes, of course, other interpretations are possible. Other sub-wave counts are possible as well. There's no need to show you 5 to 6 different counts, because since November, Bitcoin is adhering perfectly to this wave count. So why would I look at something different at the moment if Bitcoin has so far perfectly, nearly flawlessly, of course, it didn't catch every single small movement here, but it nearly flawlessly adhered to this Elliott Wave count. So why would I need to look at something different? Should the price suggest at some point that this count was incorrect, then of course we have to revise it. But for now, because it's perfectly adhering to this count, this is what we're going with. And there are discussions around, is this not a wave two? Is this a wave four? My view is it's a wave two. On the log scale, it's looking like a wave four, but I don't use the log scale because, in my opinion, the log scale is not really suitable for Elliott waves. Where it can be used, but it's, in my opinion, if we can use the arithmetic chart, we do, because the log scale just distorts wave relationships. And these natural wave relationships, they are really what you want to get an understanding of in Elliott waves. You want to see, right, that wave is much larger than that wave, so okay, it's rather a wave two or whatever. If you use a log scale, it sort of flattens everything out. It just doesn't give you the correct view of the waves. And if you're a real Elliott Wave analyst who cares about the wave relationships and the strength of certain waves compared to others, my view is you have to use the arithmetic chart, but as everywhere in life, there are different views on things. Now, we can see that we're sort of still caught in this range down here. Bitcoin now really needs to break out. Bitcoin was in a triangle yesterday, made you aware that we were in an apex here, that a breakout would be imminent. You never know in which direction the breakout happens with a triangle. It did happen down, it didn't go up. That would have been nice in the view of going into a wave 3 area. However, it doesn't invalidate anything. We can still go with that scenario at the moment. However, it would mean that we have created another 1-2 setup, or so basically this is the wave 3 we're waiting for. Since the low here at 22,400, we waited for that. So we'd say we possibly completed here a wave 1, a wave 2, we'd be now in the wave 3. Of course, the wave 3 itself has 5 waves, like here a 1, a 2, and now the 3 would be coming of the wave 3. Alternatively, we could say, okay, this was a 1, this was an A, B, or maybe B here, and the C would come down. Again, also that would need to hold above 22,400 to carry on with this count. Then simply this wave 2 would move over here. So it's a bit draining. Yeah, it takes time. I could even move this descending trend line lower and we say, all right, maybe we never got a breakout of this triangle. And that's the tricky thing with those trend lines. You can move them around. So overall, I mean, it hasn't really moved since the last video. That's why I still wanted to give you an update. But just the message here is no change of plan since the last video. It just takes a bit longer. Good thing is we've got the 50-day moving average below us. We still haven't maxed out this reversal area, so it wouldn't even be a problem to get down into this green area again. As long as ideally the 22,400 level is holding, but very, very important would be the $20,700 level. That needs to be holding to focus on higher and to continue to focus on the bullish scenario. As I said before, the bullish scenario, I'm only giving it a 60% probability compared to a 40% probability for the bearish one. This is still very possible, the bearish one, absolutely. I wouldn't be surprised if we see another low. It's still a 40% probability. It's something we have to expect in the current market environment. We cannot rule it out. Even though, as long as we hold those lows, I'm leaning towards the bullish scenario. Now, why is it that Bitcoin is still sort of stuck and the altcoins are starting to move? Well, you could argue, you know, the fear and greed index suggests that, yes, we have moved up. I think the lowest point was 5 recently in extreme fear. You can see it actually here. We were in extreme fear. We are now in fear. Now, we haven't even moved to neutral yet. And I think this is sort of keeping us down a little bit. You can see it on this longer term fear and greed chart. Yes, we are going up absolutely with a fear and greed index, which is a good sign. So when we change from extreme fear to fear and then to neutral, that really gives us a really good indication that the trend might be changing. However, we are still stuck in fear, and the next task for the bulls will be to push it into neutral. That would indicate a trend reversal. At the moment, we're just hovering between extreme fear, and it's not really giving us that boost that we need. So this is sort of still keeping us back, I think. We need to get into neutral, and it's always when those trend changes are happening, then it indicates that also, yeah, indeed, the trend change is happening. At least it's another signal that we can use. For now, we are sort of still stuck here in the fear range, and you can see that throughout this bear market, we have oftentimes hovered around this area here. We are not even there yet, but we've oftentimes, so we dropped here basically in March already down to extreme fear. We then recovered to 50, yeah, that was, I think, even neutral, but then we crashed down again. So that move into neutral is important, and then the move into greed to get those moves to the upside happen. Now, to really get also the FOMO kick in, which brings retail investors in. At the moment, and this is quite a good article I found. I'll link it actually in the description. Bitcoin hodlers holding strong, but no new demand yet. Here from 2nd of August. What I was looking for is something like this here that actually shows you based on Glassnode, information from Glassnode, one of the good analysis platforms in the crypto space. We are looking at the number of active addresses. So how many new people are actually, how many people are actually coming into the crypto space and are active in trading Bitcoin and using Bitcoin, and this is the 7-day exponential moving average. It just shows you that you had here in 2020, you had this bull market influx of new demand. That's what we want. That's what we want to see. Then we had demand destruction, yes, and here another increase from June into November 21. However, you can see we're sort of still in this range, in this sort of slowly declining range, and that we haven't really broken out of. Yes, the price has started to move up slowly, but it did that here as well between January and February. But we haven't really seen those new addresses coming in. The argument here is that we need to see that to bring, I mean, that goes in line basically with the fear and greed index, but we just have to bring this retail demand in. We have to bring those, those retail investors in. We have to get the FOMO running, and that will lead to an influx of new investors, traders, new money into the crypto space. And at the moment we don't see this yet. Yeah, so we are still in this range very nicely. This is visualized on this chart. Really like this chart. Shows you very nicely the different sentiment that is going on in each of these stages of the chart history. And this is what we need to see next. That it sort of looks like it's going a bit higher, but don't really see it yet. I remember this was when a lot of people were still bullish around April, I think. New people came in, hoping probably for another move to the upside. Didn't happen, and now they're just waiting as we dropped even lower. So there is certainly something interesting here as well. It showed you the bear market recovery that was back in 19 and 20, and then we recovered from that indeed, and now we've got something similar, bear market recovery. So it's a similar profile to here, and after that, after you moved up and came down again, similar to all of this period in the bear market 2018, 2019, after that up and down happened, based on the number of transactions per second, we saw a boost in price. So that also would suggest that we're close to getting higher, but there's no guarantee yet because we haven't seen the signal yet. But yeah, I'll link you that in the description. It's quite interesting though to take a look and read through it. But yeah, I think we are sort of still stuck in this low bear market demand profile. Now that can change, of course, but this I think is one reason that why the Bitcoin price isn't moving. But on the other hand, you know, I think you don't need these kinds of information. It's just good as an overview, but looking at the chart alone is probably enough. That's why I mainly do it, because the macro doesn't give you price targets, does it? Those charts do. And in the end, it's like, where do you start? It's like chicken and egg. So where the chart here is obviously influencing people coming into the market, and those new people coming into the market will influence the chart. So it's where do you start, right? So it's like if the price is going up, at some point more retail investors will come into the market. That will in turn increase the price, and so on. It's like the continuous cycle, like in a cycle of slow demand or low demand we are currently, and we just need to break out of it. And as soon as you can see that, it's like reinforcing, you know, self-reinforcing, where it's just starting to move up at some point. But we're not there yet. It's slowly going in the right direction, but we now need to see those breakouts that I also mentioned in the previous video need to move up above this wave X high, very important, at 23.6k pretty much. That's the next target for the bulls, and then this 24.3k level to the upside. Alright, and that's my update about Bitcoin here. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye bye.